Imagine you're NVIDIA, a tech giant at the forefront of the AI revolution, known for pushing the boundaries of what's possible in computing. You're tasked with designing a special chip, the H20, tailored specifically for China, your single largest and most lucrative customer, a market that's been fueling your explosive growth. After months of navigating a maze of US export rules and government scrutiny, you finally ship it out, expecting billions in revenue and a foothold in the world's fastest-growing tech economy. But then, out of nowhere, China calls, "Thanks, but no thanks, stop buying these chips." The message is abrupt, and the impact is immediate. The order comes straight from the top, the Chinese government itself, targeting not just NVIDIA but tech giants like ByteDance and Alibaba, sending shockwaves through the entire industry. Overnight, your golden ticket to the Chinese market becomes a symbol of deepening mistrust and rising tension between the US and China, two superpowers locked in a high-stakes tech rivalry. The H20 chip, which was supposed to keep business flowing despite mounting restrictions, is now rejected, publicly and decisively, with the world watching. This isn't just about one product or one company, it's a sign that the tech war is escalating, with each side drawing harder lines and raising the stakes for everyone involved. China's move sends shockwaves through global markets, rattling investors and disrupting the entire supply chain that connects factories, companies, and consumers around the world. The message is clear: China won't accept technology it can't fully control, especially when it comes from its main geopolitical rival, and especially in sectors as critical as artificial intelligence and data processing. This isn't a negotiation, it's a line in the sand, a declaration that the era of easy tech cooperation is over. Years of tit-for-tat over semiconductors, export bans, and retaliatory measures have led to this standoff, with both sides unwilling to back down. The H20's story is a microcosm of a much bigger conflict, one that's about export controls, national security, and the race for technological supremacy in the 21st century. The global supply chain, already stretched thin by years of trade disputes and pandemic disruptions, is now more fragile than ever, with every new restriction threatening to break it further. The competition for advanced technology isn't just changing business, it's reshaping the world order before our eyes, with consequences that will echo for years to come. Why did China reject the H20? Officially, national security. The government feared hidden backdoors, chips that could be tracked, shut down, or used for spying. US officials didn't help, boasting that China only gets second-best tech, fueling distrust. Proposed US laws would require chips to have security and location features, exactly what China fears. The H20, designed under these shadows, became suspect by association. But this is also about China's bigger goal: technological sovereignty. Relying on US tech is seen as a vulnerability. By blocking the H20, China is forcing its own industry to innovate, even if it means short-term pain. Chinese companies admit their AI will suffer, but the government is betting on long-term independence. It's about building a great firewall for hardware, not just the internet. China's rejection didn't come out of nowhere. It was a calculated move shaped by years of tension. It was a response to years of US restrictions and escalating tech rivalry. The US banned its most powerful AI chips from China, fearing they'd be used for military or strategic advantage. NVIDIA, desperate to keep its biggest and fastest-growing market, designed just legal chips like the H20 for China. It was a risky balancing act, powerful enough for business, but just weak enough for US approval. After intense lobbying, some H20 exports were allowed and orders started flowing in from Chinese companies. But Beijing saw these chips as second-class, and potentially compromised or even sabotaged. What looked like a clever workaround in California looked like a Trojan horse in China's eyes. The H20 quickly became a symbol of China's subordinate position in global tech competition. The cat-and-mouse game between regulators and engineers only deepened mistrust and suspicion. In the end, the workaround backfired, leaving both sides more wary than before. For NVIDIA, China's sudden halt was nothing short of a financial disaster, sending shockwaves through the entire company and the tech industry at large. The company had spent months stockpiling H20 chips, betting big on massive sales to Chinese customers. Warehouses were packed and anticipation was high, as executives expected record profits. But when China slammed the door shut, NVIDIA was left holding the bag. The company was forced to take a staggering $4.5 billion write-down, chips with nowhere to go, gathering dust and draining value. Sales plummeted by billions of dollars, and the pain didn't stop there. The shock rippled through the global supply chain, hitting manufacturers and suppliers from the US to South Korea, leaving factories idle and workers uncertain about their future. Even software firms like Synopsys, which depend on chipmakers, saw their stocks nosedive. The fallout forced them to lay off workers, adding to the growing sense of instability in the tech sector. A single decision made in Beijing triggered job losses thousands of miles away in Silicon Valley, showing just how interconnected and vulnerable the global tech economy has become. The cycle is vicious. US rules limit sales, China retaliates, and American firms are left to pick up the pieces. Each new restriction only deepens the divide and increases the risks for everyone involved. NVIDIA's CEO denied any security concerns and tried to reassure investors by floating new chip ideas, but now, every product faces the same political minefield, with innovation constantly at risk of being derailed by international tensions. The company is stuck between two powerful governments, neither willing to compromise, leaving executives frustrated and uncertain about the future. The H20's fate is a stark warning for any business caught in the crossfire of a tech war. No matter how big or innovative, no one is immune to the fallout. The tech war isn't just a headline, it has real global costs, affecting jobs, innovation, and the future of the entire industry. Blocking the H20 isn't just retaliation, it's China's push for tech independence. For years, China has assembled products designed elsewhere. Now, it wants to design the future. Billions are being poured into domestic chipmakers like Huawei, closing the gap with US giants. By forcing tech giants to buy local, China is betting on homegrown innovation. It's a tough transition. Companies like Alibaba and ByteDance admit they'll fall behind without NVIDIA's best chips. But the government's message is clear: align with national goals or get left behind. This push could create a powerful, independent tech sector, or leave China isolated on a slower track. The world is watching to see if pressure creates diamonds or just more division. The stakes are nothing less than the global balance of technological power. China is all in on self-reliance. The NVIDIA standoff is just one battle in a global tech war between the US and China. This conflict is not just about one company or one sector, it's a struggle for technological dominance that spans across multiple industries and innovations. Both see leadership in AI and chips as vital for security and prosperity. These technologies are the backbone of modern economies and military capabilities, making them crucial for national interests. The result? Painful decoupling, each side racing to reduce dependence on the other. This decoupling is reshaping global supply chains and forcing companies to rethink their strategies. The US under Trump has imposed sweeping tariffs and pressured allies to follow suit. These measures were aimed at curbing China's technological advancements and protecting American industries. Tariffs have driven up costs and fueled inflation, reshaping global trade. Consumers and businesses alike are feeling the pinch as prices for goods and services rise. Allies are being pushed to pick sides, fragmenting the world into competing blocs. This geopolitical tension is creating new alliances and rivalries, altering the global landscape. China isn't just reacting, it's building its own alliances and using its market as leverage. By strengthening ties with other nations, China aims to counterbalance US influence. The Belt and Road Initiative and tech investments are expanding its influence. These projects are not only boosting China's economic reach but also its political clout. By rejecting US tech, China signals it can say no and shape its own future. This move is a clear statement of intent, showing that China is ready to forge its own path. Businesses everywhere now face a world where tech and geopolitics are inseparable. Companies must navigate this complex landscape, balancing innovation with geopolitical considerations. The rules of global trade are being rewritten. As nations and corporations adapt to these changes, the future of technology and international relations remains uncertain. Why should you care about a chip war? Because these chips power everything: phones, cars, AI, the economy. China's rejection of the H20 marks a split, two rival tech ecosystems, US and China. The era of globalized supply chains is under threat, replaced by duplication and inefficiency. Prices could rise, innovation could slow, and companies everywhere must rethink their strategies. The days of separating business from politics are over. This isn't just about money. It's about power, values, and who sets the rules for the future. The country that leads in AI will shape everything from defense to medicine. The US fears a world led by China means less freedom. China sees US moves as an attempt to block its rise. The chip war is a proxy for a bigger ideological struggle. Its outcome will shape the world for generations.